Welcome back to Investing Talk Podcast. Today, we're focusing on ABVC Biopharma. This is a company in the biopharmaceutical space doing some interesting things, I think. They've got to focus on botanical-based drugs, but also some, other ventures outside traditional pharma. We've gathered several reports to really get a handle on what's happening with ABVC, financials, future plans, the whole picture.
Yeah.
Our goal, to kind of cut through the noise and pull out the key insights for you.
Right. And what's interesting straight away is that ABVC Biopharma, it's a clinical stage company, but they're not just doing one thing. They specialize in drugs from plants, botanical ones, and also medical devices. If you look at their pipeline, they have, I think, 6 drug candidates and 1 medical device, ABV 1701 Botargus. And these target some pretty major areas: central nervous system disorders, oncology, ophthalmology.
Okay, hang on. Botanical-based drugs, that's quite specific. And you mentioned they're also involved in CDMO services, is that right?
That's correct, yeah. CDMO stands for Contract Development and Manufacturing Organization. So basically, they lend out their expertise, their facilities, to help other pharma companies develop and make drugs. It's smart. It gives them another income stream, helpful while their own drugs are still going through trials, which, as you know, can take a long time and cost a lot.
Right. Provides a bit of a cushion. And I also saw something about an AI-enabled agricultural facility in Taiwan. That feels a bit out of left field for a pharma company.
It does, yeah. It definitely raises some questions about, their overall strategy and where they're putting their resources. On one hand, maybe it helps secure high-quality plants for their botanical drugs, but on the other, it's a whole different ballgame, different risks, different tech challenges.
Okay, let's pivot a bit. Let's talk about their recent financials. We don't have the absolute latest stock price here, but the report shows some pretty significant operational changes.
Yes. The big one is that huge drop in operating expenses in the first quarter of 2025, down 76% compared to Q1 2024. That's substantial. Shows a real push on cost management.
And that seems to flow through to the bottom line too, right? The net loss.
It does. That also decreased significantly, down 68% in Q1 25 compared to the same time last year. That's a kind of positive trend investors usually like to see, even if they're still in the red.
And revenue. That was another eye-catching number.
Oh, definitely. Revenue growth reported at plus 234%. Now, that was mainly driven by hitting milestones in their global licensing deals. So it really suggests their intellectual property, their early work, is seen as valuable by partners. Could mean less need for, say, dilutive financing down the road.
Okay, let's dig into those numbers a bit more. For the full year 2024, ending December 31st, revenue was around $500,000, $509,589 to be exact.
Yeah, mostly from out-licensing that IP and the CDMO services, which, okay, isn't huge compared to big pharma, but it shows they are generating some income from what they have.
But the net loss for that full year, 2024, was still pretty significant, around $8.28 million.
Correct, which worked out to a loss per share of $1.80, basic and diluted. But, that's not unusual for clinical stage biotechs. R&D costs are high. It's often the trend that matters most to investors at this stage.
Right. And that trend improved in Q1 2025. The net loss shrank to about $944,000, or just 6 cents per share loss. Still negative EPS, but moving the right way.
Exactly. Dollars or 6 per share. The direction is positive. And while the reports didn't give specific debt figures, that laser focus on cutting operating costs, it strongly suggests they're paying attention to their financial leverage.
Okay, so summing up some strengths here, that big jump in licensing revenue really stands out.
It does. It sort of validates their R&D, doesn't it? Especially in botanicals. Shows other companies see value there.
And the cost cutting. That sharp reduction in expenses shows effective control.
Very important for a company not yet profitable. Fiscal discipline. Plus, they do have that active pipeline. Several trials planned for phase 3 stages, that poised towards potential future value creation, assuming things go well. Those are still early stages, testing safety and initial signs of working.
And they're expecting, around $19 million in cash this year from licensing deals? 3 of them.
That's the anticipation, yes. If that comes through, it would certainly bolster their financial position quite a bit, give them more runway.
And there was that land asset in Taiwan mentioned too, valued around $7.67 million.
Yes, which seems tied to that agricultural biotech plan we talked about. Shows they're serious about it, at least financially.
Okay, but we need to balance this. Let's talk risks. The elephant in the room is they're still losing money, right? And net losses continue.
Absolutely. Profitability isn't here yet. That's a standard biotech risk, but a risk nonetheless. Takes time and a lot of capital to get a drug to market.
And that AI agriculture venture, It's innovative, maybe,
Mhm.
but it adds a whole layer of execution risk, doesn't it? Could distract from the core pharma work.
It certainly could. It's a diversification, but into something quite different. Operational risks, tech risks. And we don't know yet if it will actually pay off or support the core business effectively. The feasibility is still a question mark.
Plus, they're relying heavily on that licensing income right now, not product sales. That can be lumpy, right? Depends on hitting those milestones with partners.
Exactly. Their cash flow could be somewhat volatile in the near term if a partner's trial hits a snag or there's a delay in a regulatory filing associated with a milestone. That could impact ABVC's expected revenue.
And then you have the usual biotech sector risks on top of all that. Regulatory hurdles, competition.
Precisely. Getting FDA approval or approval from other agencies is never guaranteed, and they need their partners' milestone payments to keep flowing.
So how's the market likely viewing all this? The cost cuts, the pipeline progress. That sounds potentially positive.
It could be, yeah. Especially for investors focused on innovation, but also wanting to see some fiscal responsibility. But the lack of profit, the sort of speculative nature of the AI farm, that probably gives some investors pause, creates a degree of caution.
How do they stack up against competitors? You mentioned they're in that botanical niche.
Right, so they're not directly competing with giants focused on, say, synthetic molecule or gene therapy in the same way. Their pipeline size is modest compared to some. 6 drugs, 1 device. And their revenue model licensing and CDMO is different too. Many peers rely on actual product sales or are aiming for that sooner. Financially, they show those improving losses, while some peers might already be profitable or have much deeper pockets. So yeah, their innovation focus is distinct botanicals, plus this AI ag tech angle positions them as more of a niche player.
Okay, looking ahead. What should people watch for? Any key catalysts coming up?
The big things are those clinical trials planned for this year. The start, and more importantly, the results from the Phase 2 and Phase 3 studies. If those results are positive, that could be a major boost to their valuation, could attract more investment, maybe bigger partnerships.
Makes sense. And even without specific analyst ratings in our sources, you'd think the better quarterly numbers might start to generate some cautious optimism.
Generally, yes. Consistent improvement, hitting milestones. That's usually what gets analysts more interested and improves investor sentiment over time.
So wrapping this up, what's the takeaway for someone listening? ABVC Biopharma, it's quite a mixed picture. Strong growth in licensing cash, serious cost-cutting efforts, that's good. Unique focus on botanicals, this ambitious AI agriculture play, intriguing possibilities there. But you have to weigh that against the ongoing net losses and the uncertainties around these new ventures.
Absolutely. As they push forward with the clinical trials and explore these other avenues, you really need to watch their path towards actually making a profit and whether these strategic bets, like the ag tech facility, actually succeed.
It feels like a company with definite potential, but one that needs, careful watching.
I agree. It really highlights that classic biotech dynamic, high risk, potentially high reward, and they've added this extra layer with the agricultural tech diversification. It'll be fascinating to see how it all plays out for them.
We hope this analysis was helpful. Please do subscribe, like, and comment. Let us know what other companies you'd like us to look into next time.